Now, the stock today down, but this follows two updates, so perhaps priced in that this vaccine may be more likely to get back into people's arms with a little bit of time. Italy and France both indicating that they may be okay with using this vaccine again and again, the WHO backing today. As for the tech losers on the morning, Apple and Tesla, those momentum stocks are down, not for any reason having to do with, and these are the banks, actually, this of course is the top sector on the day, Wells Fargo, Goldman Sachs, Morgan Stanley.
Okay, ladies and gentlemen, I am looking to buy right now British pound, and I want to buy, let's wait, let's see, it's moved against the order I wanted to place, so I need to see what's going to happen next, because I was looking to buy at higher level. Okay, I'll speak to you later, guys. This is what it's all about, day trading. You can't just invest and trade imaginary pairs. This happened live in front of you. So if I don't want to play straight, it means I don't want to play straight. So I need to wait for better price. Okay, in this case, if British pound will go even lower, I probably will sell short. Let me see if I'll be able to sell short. I need to wait how this candle stick will close. I need to see the close price for this candlestick, and then I will make decision what's going to happen with this. If it will close around this area, yeah, I'm going to place an order to sell short. So let's see, what time is it right now? That's in about 15 seconds. It's supposed to appear a new candlestick. Let's wait a little bit, and I will let you know any second what's going to happen. Okay, that's fine. And I'm going to sell short at 139.18. The order placed to sell short at 139.18. Okay, yes, all right. So if you're looking to sell short British pound, here is your chance. Please place an order because it's still price still above the level right now, and then we will see for the price direction where it will go, and then I'll let you know what I'm going to do next. I'll speak to you later, guys.
We haven't seen peak growth yet. This is a conversation about peak growth expectations, whether we've got to that inflection point, and whether it's the time to shift into reverse in this rotation. And Morgan Stanley have really contributed to that debate over the last 24 hours. I'm pleased to say that Matt Hornback joins us from Morgan Stanley now, and Jared Woodard of Bank of America. Jared, I want to start with a note from you, sir, that really plays into this call as well. It's something that you've got to say when you say, buy the growth dips and sell the value rips. And I'm going to quote you at the moment. Temporary inflation spikes and market overshoots in cyclicals, commodities and value stocks are good opportunities to take profits. And we'd be buying prudent yield banks and small US growth stocks on the dips, including big tech at super support levels, rather. Jared, what's behind that?
Hey, John, but I mean, the reasoning behind those investment conclusions is simply that concerns and fears about an inflation overshoot, about rapidly higher, shockingly higher bond yields, we think are all concerns that are overdone. We think instead that the fears that large fiscal stimulus, aid around COVID and easy Fed the concern this is going to cause high inflation isn't supported by the data. We looked at where the cash is today, where the stimulus checks are going, and what people plan to do about it. And both the data from the Federal Reserve, our survey data, all suggests that you will see some increase in spending, especially around leisure and travel, but that most of the cash is in the hands of folks who don't tend to spend anyway, the top 20% or so of households. And even the stimulus checks that are going out today, consumers told us in our survey that about half.
Okay, position opened for British pound at 139.18, just right here. That's a short position, so order filled at this level. Okay, let's see. I'll speak to you later, guys.
As running hotter than previous cycles, I think for good reasons. The question ultimately is, though, does it then run shorter because of the reaction function of the central bank to an economy that, by all looks of it, is going to be outperforming the Fed's expectations? We're going to get an update on that today, John, to see just how more optimistic the Fed's projections have become vis-a-vis growth. But I think the more important issue for the bond market, at least, is how does that translate into their unemployment rate forecasts? How does the unemployment rate forecast translate into their inflation forecasts? Because in order to put a rate hike in the dot plot, John, the Fed has to be forecasting higher than 2% core inflation. And it's unclear whether, this stimulus, which they've been describing as transitory, is going to give them enough confidence to do that.
Well, I think Jared's touched on a key variable here. Jared, how difficult or easy is it to know what's going to happen on the consumption side? What will happen to those savings that have been built up over the last 12 months? And what will happen to where those checks go that have been delivered in the last week or so?
Yeah, I think there's two pieces to this that are really important. Number one is, where is the cash today? We looked at the Federal Reserve data in liquid assets, cash, money market accounts, and so on, to see, where is the capital? There's lots of cash on household balance sheets, but we found that there's about 10 trillion of the total 15 or so that's in the hands of the top 20% of households. Now, we know historically those folks don't tend to spend, by the same degree at all as folks lower down in the income bracket. There's about 2 trillion in the next decile, and then just about 3 trillion in the 0 to 60% range of households. So there's that huge inequality that everyone's familiar with. That's the status quo. If we just look at what's happened since COVID, since the end of 2019, you've seen an increase in the top 20% of households of about $1.5 trillion. It's actually, probably a little bit more than that now. The bottom, the rest have seen an increase of about half that, 0.7 trillion. So there's a ton of capital, but it's in a lot of places of households that are much more likely to invest in financial assets than to spend into the real economy. Now, the other part of that is that obviously the stimulus checks are targeted more at those low and middle income households. So we conducted a survey, about 3,000 people. We asked them simply flat out, if you get a stimulus check this year, what do you intend to do with it across a few different categories? And when we compare those responses, both with historical data on those fiscal multipliers that economists tend to talk about, and with what people said they did last year, about half of people said they're going to save, even among the lowest income bracket. These are people who historically would be expected to spend all of those checks. So it's an incredibly stark contrast with what the historical data would suggest, all pointing to a much lower inflation impulse once you get past the initial enthusiasm of reopening.
So Matt, weigh in on this. Getting this call right on where this cash is and where this cash goes, is it the difference between GDP with a 5 handle and GDP with a 7 this year?
Well, John, that's exactly the debate. And I think ultimately how it ends up panning out is going to have an important impact on how the central bank sees the future of growth and inflation in the economy, and then how it translates into their policy response, which I think ultimately is where we focus the most, because that is going to have the biggest ripple effect across financial assets that we're trying to forecast, John. And that's why when we look at the outlook for Treasury yields, we do see them going up a little bit more from current levels. But when you look at what the bond market's implying for year end, it's actually above our year-end forecast now. And so it actually starts to make the bond market look slightly more attractive, John.
Matt, you and I are going to talk a little bit more about the bond market in just a moment. We'll talk about Europe too. Jared, I want to wrap things up by talking about the equity market. And as you and I often do every month or so, we talk about the fund manager survey that comes out of Bank of America, and the title got everybody's attention. It's over. And just what I sense from you, Jared, it's time to lean the other way. Now you start to get that consensus view. Do you think peak expectations are here and it is time to lean the other way?
Well, I do think the peak expectations are here, at least as far as the super cyclical, super deep value inflation hedge part of the trade, part of the cycle. I think that maybe that's behind us. It's certainly become consensus. I mean, our fund manager survey from our department has made that clear. If you look at fund flows, the same picture emerges that people know the story. They've positioned accordingly. I think there's more risk of a disappointment on the inflation front. There's more risk of an overshoot in those cyclical value commodity type trades. You know, we still like financials, but otherwise I think there's risk of an overshoot. And that's why we argued in our latest note that this is a good moment actually to look at opportunities in growth, maybe in tech, maybe in small caps, in defensive sectors, even to buy on those dips rather than try to lean into, you know, squeezing the last bit out of this early cycle trade.
Getting one of those dips right now, the Nasdaq off by 1.3%. Hey, Jared, it's good to see you. Jared Woodard there at Bank of America. Matt Hornback and Morgan Stanley will be sticking with us. Your S&P 500 down about 0.5%. With the movers, here's Abby.
John, let's start out with the point of pain, and that, of course, is tech. With a twist, China tech shares are under pressure. In particular, Pinduoduo, the China e-commerce giant, in fact, taking over Alibaba, down about 9%. This after they did actually say that their chairman is resigning, and they are still at a loss, even though there was strong revenue growth. You see Alibaba gaining ever so slightly, but Baidu also down in sympathy, so some pressure there. As for U.S. technology, if we take a look at both Apple and Tesla, we're going to see pretty decent declines. No change with the fundamentals, as you know. It has everything to do with the pressure from rising yields, valuation, or the question, what sectors do folks want in on? And we see some of the other momentum trades this year, Riot Blockchain down, Tilray as well. As for the best sector, as you know, John, it's all about the banks. The big banks are trading higher in sympathy with yields and a steeper yield curve.
Abby, thank you. What a day we've got set up for you. Your 10-year, 166, yields high by 4 or 5 basis points. And if this doesn't underline the difference between the conversation we're having here in America and the conversation that's taking place in Europe, nothing else will. Just look at the numbers on the vaccine front. The latest chapter in Europe's vaccine saga, the WHO ruling that AstraZeneca's vaccine should continue being administered. That conversation is just around the corner with Maria Tadeo out of Brussels and Matt Hornback out of Morgan Stanley. From New York City this morning, good morning. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
AstraZeneca has unfortunately underproduced and underdelivered, and This painfully, of course, reduced the speed of the vaccination campaign.
Something else did too. Governments blaming AstraZeneca for a slow rollout after a series of EU nations suspended the shot. This coming as a growing list of EU regulators back the vaccine. The WHO writing in a statement the following. The WHO considers that the benefits of the AstraZeneca vaccine outweigh its risks and recommends that vaccinations continue. Out of Brussels, on a crisis on the continent, is Bloomberg's Maria Tadeo. Morning, Maria.
Well, Jonathan, I guess this was a bombshell presser by the head of the European Commission, at times very, very severe in AstraZeneca. So if you were hoping to get an apology from European authorities, that is not going to happen. Instead, they still blame in many ways the company. And this is a situation that is a communications nightmare, and two, is a full-on contradiction, because on the one hand, you have national governments that have questioned whether or not that vaccine works. There's been a lot of questions about the damage that it may have done to the reputation of that vaccine, whether or not it's affecting the take-up, because at one point, if you're a European citizen, you may be in a situation where we're very confused as to whether or not this works. But at the same time, the European authorities are saying if we have seen a slow rollout of the vaccination campaign, is to some extent because AstraZeneca has under-delivered, has not honored their contract, and the way that the head of the European Commission described this is painful. We're not able to rely on AstraZeneca. And she also brought up again, and this is a real warning to the United Kingdom, that reciprocity means two ways. There's sites that are making the AstraZeneca vaccine in the United Kingdom. They're also making them in the European Union. If there's a shortfall, then that means the European authorities should ask for that site to make vaccines coming into the EU from the UK. So you have everything here. It's a combination of communications fail to some extent, the regulator being contradicted by the politics, and now still the authorities very much blaming the vaccine and the company, in this case AstraZeneca, really singled out the company as one that cannot be relied upon.
Maria, it's unbelievable. We have a situation where Brussels is essentially saying we haven't got enough of this vaccine, and you've got other countries, France, Italy, questioning the safety of this vaccine. Europe can't get on the same page. What's new? The issue is people are going to die because of what's happening in Europe right now. I'm trying to understand how reliant they are on the AstraZeneca vaccine. If this spat continues, if acceptance is an issue, what else have they got?
Well, I think, there's two issues. First of all, you have to factor here that, Jonathan, the AstraZeneca vaccine is not the lead vaccine in the European Union, and they're hoping that new ones are going to come into play and they're going to make up for the Astra fallout. So to some extent, they focus on Pfizer, they focus on Moderna, and they have a lot of hopes on Johnson & Johnson just because it's a single-shot vaccine and is coming into play in April. Now, in AstraZeneca, I would say they are aligned to the extent that they're heading for a big U-turn tomorrow. Tomorrow, we're expecting the European Medicines Agency to give the green light to this vaccine, to say that the benefits would outweigh the risk. And that means that every government that has suspended the vaccine for a few days now will now say that they will resume using that vaccine. But at one point, and you really have to put yourself in the situation of the average European citizen that's watching this, that's being whiplashed every day, do you want to get that vaccine? At one point, you may go, I'm not sure. I don't want to take it. I'd rather wait. And that, of course, is problematic when you try to accelerate the distribution and the rollout. So again, it's a tricky one when you look at AstraZeneca. There's many factors coming into play here. It's not an easy answer.
Maria, great to catch up. Maria Tadeo there out of Brussels. I'll let Maria take care of the politics. We'll let the medical professionals take care of the medical issues. We've got to grapple with what happens with this market, this economy. Morgan Stanley's Matt Hornbeck joins us now for more. Matt, today will underline the difference in the outlook between the Federal Reserve and the American economy, and last week what we got from the ECB. Just how wide is that spread going to be this year for you?
Yeah, John, ultimately, in terms of the policy spread, we don't think there will be much change this year, but clearly other markets, like the longer ends of the respective sovereign curves, are diverging, right? The spread between the 10-year Treasury and the 10-year German Bund continues to inch to new wide levels, John, close to 2%, 2 percentage points of spread differential between the 10-year sovereigns. And, ultimately, to the extent that these fundamental issues continue to move forward as we project, we should still see some spread widening there, John. Now, whether it comes with interest rates moving up or whether it comes with interest rates consolidating and moving down is a different question, but we certainly still see scope for wider spread levels between the U.S. and Europe. We're also seeing this, John, in the currency markets. The dollar has begun to perform relatively well against the euro. And that's a debate right now in the marketplace as to what extent does the outlook for the U.S. continue to drive the U.S. dollar to richer valuations against what the consensus is currently forecasting for still a weaker dollar.
119 on euro dollar right now, Matt. Do you think you can carry on pushing that story?
So once we get past the Fed, John, we'll obviously have more clarity on that. We do think that there's scope on the back of what we expect to be a dovish Fed meeting today. We do think that there's some scope for some near-term dollar weakness, but ultimately in the medium to long term, we do think that the growth differential story ends up winning out here. So ultimately, we do think the dollar has some scope for some appreciation medium term versus the euro, John. That's how we're looking at it today.
Matt, I want to finish on this point because you and I will no doubt be having this conversation for maybe the next decade to come. What we saw coming out of the last crisis really sowed the seeds, planted the seeds of what the recovery would look like for the next 10 years. Shallow, but relatively speaking, better in America compared to Europe. Matt, I do wonder whether we're repeating that again. And I wonder from your perspective, looking at the US cycle, do you anticipate how different this one will be, considering the reaction we're seeing play out right here, right now?
And a lot of it comes down, John, to the impact of the fiscal stimulus that was put into place very recently, as well as what the future of fiscal stimulus looks like in the United States. Of course, we've already begun debating what the future of the infrastructure package is going to look like. To what extent is that package going to be financed through Treasury issuance, or to what extent will it be financed through higher taxes? Those are very important issues, not only for the bond market, John, but also for the economic impact on the United States. And so, look, I don't think we can solve this debate today on the future of that package. That's something that ultimately we see playing out towards the latter part of this year. But these issues around fiscal stimulus are extremely important to this growth divergence story, John. And so we'll continue to monitor that.
Matt, good to see you. Matt Hornback from Morgan Stanley. Thank you, Matt, as we count you down to the Federal Reserve decision with your sector price action this morning. And good morning to you all worldwide. Here's Abby.
John, very quickly, it is all about that cyclical trade happening, tech down. So, of course, on top, we have the industrials, financials, energy, the reflationary trade going, riding that wave of rates trading higher into the Fed meeting. On bottom, of course, tech and communication services. This is the story of the day, the story of the year, and there it is, John. Very clear that folks want in on the new economy, the old economy sectors, tech, last year's trade.
Abby, thank you. The bond market at the epicenter of this, coming up on the program. The events you need to be watching going into the weekend. There's only one today. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
$167 on 10s. That is your new post-pandemic high on the 10-year yield in America. And that's why you've got the NASDAQ down by 1% right now. Right now, we're up 5 basis points to 1.66% on a US 10-year. And equities are lower going into Chairman Powell. That's the market story. Here's your trading diary. What you need to be watching over the next couple of days. 2 p.m. Eastern, a Fed rate decision. 30 minutes later, Chairman Powell news conference. Tomorrow morning, another round of jobless claims. Plus, the Bank of England with a rate decision of its own, and rounding out the week on Friday with the Bank of Japan rate decision. From New York City this morning, good morning. More still to come on Bloomberg TV. Look out for the Fed special with Caroline Hyde and Tom Keene a little bit later. Continue the conversation with me on Twitter at FerroTV. This was the countdown to the open. This is Bloomberg TV.
Hello traders, as you can see it moved down, and I'm going to place stop on profit for British pound at 139.98.8 138 98.8, it's just right here. Okay, stop on profit place. Whatever happened, you don't have to worry that you will lose your money on this trade, because you will end up in profit. Yeah, it's as simple as that. If you want to get a strategy, please do so from our website. Otherwise, you can carry on following our trades. You will see 5 pairs on our screen. We have other pairs, but we can't show you all screens, just physically not possible. And because of coronavirus, we cannot invite you to our office. So please follow our trades for free. We don't charge you for this, and you can make a decent profit. Okay, I'll speak to you later, guys. Well done. Hang on, we probably will close any minute. We probably will close this position. Let's see. Too many people placed stop. Some of them placed stop loss, probably. Let's see what's going to happen with this candle chain. Yep, position closed on British pound at 139.98.8. In our case, we earned £200. In your case, it's all about how much broker pays you per pip. We made 2 pips, we made £200. Okay, well done, traders. I'll speak to you later. Bye.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing